Welcome to the Deep Dive. Today we're tearing into the recent financial results for GitLab. We're pulling directly from their Q1 fiscal year 2026 earnings call and the press release that came with it. You got the source material there, and our goal is, well, pretty simple. Unpack the key numbers and figure out what this quarter really tells us about GitLab. Ready to dive in?
Absolutely. Let's get into it. Okay, so the headline number, always revenue first, right? GitLab reported total revenue of $214.5 million for their Q1. That's up 27% year over year. So, solid growth there.
Okay, 27% growth. That's definitely strong. But looking at these numbers, it feels like the real story this quarter might be profitability. Seems like a huge shift.
Yeah, you nailed it. That's where it gets really interesting. Forget just the top line for a second. They made a massive leap on the bottom line. Their non-GAAP operating margin, it hit 12%. Now, compare that to Q1 last year, it was negative 2.3%.
Wow. Okay, from negative territory to a solid positive 12%. That's a huge swing, like 14 points.
Exactly right. Around 1,400 basis points year over year. And that flows right down to operating income, naturally. They went from a non-GAAP operating loss of about $3.8 million last year to positive income of $26.1 million this Q1. That's a big operational improvement.
And better profits usually mean better cash flow, right? Did that happen here?
Oh, absolutely. Big time. They pulled in a record-adjusted free cash flow, $104.1 million for the quarter. That works out to a 49% adjusted free cash flow margin, almost half their revenue.
49% margin. That's impressive.
It really is. Now, they did mention, it's partly driven by that operating leverage we just talked about, and also some seasonality in collections. Q4 deals getting paid in Q1. Still, generating that much free cash flow is definitely a major highlight.
Okay, so great top line, massive profit improvement, record cash flow. What's happening on the customer side? Is it just more customers, or are they getting more out of the ones they have?
It seems like a bit of both, but the real focus looks like growing within the existing base, especially the larger accounts. So they finished Q1 with just over 10,000 customers, 10,104 actually, spending over $5,000 a year. And those customers, they bring in over 95% of the total ARR.
Okay, so the core base is solid. What about the really big fish?
Yeah, that's where the growth engine seems strong. Customers spending over $100,000 a year. That group grew 26% year over year. They're up to 1,288 of those now. That growth rate, 26%, is very close to the overall revenue growth rate, 27%. Tells you those large customers are key.
Right. Makes sense. And how much more are existing customers spending overall, that net retention number?
Good question. Their dollar-based net retention rate, DBNRR, it came in at 122%. So basically, customers from a year ago are spending 22% more today on average, which is, really healthy for a subscription business.
And what's driving that 22% increase? More seats, price hikes.
They broke it down. Roughly 80% of that DBNRR lift came from customers adding more seats, just expansion. About 5% was from, let's call it, increased customer yield, maybe price adjustments or usage. And the remaining 15% came from customers upgrading to higher tiers.
Okay, so mostly seat expansion. Why are customers adding seats or upgrading tiers? Anything specific there?
Yeah, they pointed specifically to strength in their ultimate tier adoption. That's the top tier. And also increasing sales of GitLab Duo, that's their AI stuff. So it seems customers are using the platform more broadly, adding users, and paying for the premium features and AI capabilities.
Oh,
And that ultimate tier is now a huge part of the business. 52% of their total ARR comes from ultimate.
over half from the top tier. That suggests the strategy to push premium features and AI is working, yeah.
It certainly seems to be fueling that expansion, yeah. It looks like a successful product strategy playing out.
Makes sense. And how's the SaaS part of the business doing? That's usually higher margin, right?
It is, and it's growing fast. SaaS is now 30% of their total revenue. And it grew 35% year over year, so faster than the overall company growth. That definitely helped support their really strong non-GAAP gross margin, which was 90%.
90% gross margin, wow. Okay, so looking forward, what's the guidance? What are they expecting next?
So for the current quarter, Q2, they're guiding revenue between $226 and $227 million. That implies, roughly 24% year-over-year growth. Still solid, and importantly, they expect to stay profitable. Non-GAAP operating income guidance is $23 to $24 million for Q2.
Okay, and for the whole year, fiscal 26.
Full year, they're projecting revenue between $936 million and $942 million. That also keeps roughly that same 24% year-over-year growth pace.
Right.
And the full year profitability looks strong, too. Non-GAAP operating income expected between $117 and $121 million.
And they've got cash in the bank too, I assume.
Oh, yeah. Very healthy balance sheet.
Mhm.
Ended the quarter with $1.1 billion in cash and investments. Lots of flexibility there. They did note some ongoing expenses for their Jihu joint venture in China, about $3 million in Q1, maybe $18 million for the year. But it's pretty small relative to everything else.
Okay, so bringing it all together for you listening, GitLab just put up a quarter showing, well, not just good growth, but a really impressive turn towards significant profitability and record cash flow.
Exactly. The numbers really point to solid execution. Customers are spending more, adopting the higher value tiers, embracing the new AI features like Duo. It feels like their strategy for expansion is really hitting its stride and showing up on the bottom line.
Yeah, that shift from just growth to profitable growth seems like the main takeaway here.
I think so. And it leads to an interesting thought, right? As more companies start weaving AI deeper into how they build software, using tools like GitLab Duo, how much more fuel will that add to GitLab's growth and financial performance in the coming quarters? That's definitely something to keep an eye on.